Welcome to News Beacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. Let's talk tariffs, those dry economic tools that suddenly became headline news in March 2025. The Trump administration slapped a sweeping 25% tariff on all steel and aluminum imports, citing national security. This wasn't a targeted move, it hit allies and rivals alike, aiming to protect American industries. But instead of a precise fix, it was a sledgehammer, affecting not just raw metals, but everything made from them, like nuts, bolts, and soda cans. The result? Global supply chains were thrown into chaos and companies scrambled to adapt. The legal battle was swift. By August, a federal appeals court ruled the use of 1977 emergency powers for these tariffs was mostly illegal. But the administration appealed to the Supreme Court, keeping the tariffs in place and businesses in limbo. This uncertainty made it nearly impossible for companies to plan ahead. President Trump warned that if the Supreme Court ruled against the tariffs, the U.S. might have to unwind major trade deals and refund hundreds of billions in tariffs. Money that would go to importers, not consumers. The Treasury was reportedly working on a Plan B, adding to the sense of economic turbulence. The stakes were enormous legal, economic, and political chaos all at once. The tariffs became a symbol of a new, unpredictable era in global trade. Businesses, economists, and politicians all waited anxiously for the Supreme Court's decision. The old rules of trade were out the window, and everyone was bracing for impact. The U.S.-Canada trade relationship would never be the same. Now let's look north to Canada, America's biggest aluminum supplier. Over 90% of Canada's iron, steel, and aluminum exports went straight to the U.S. This was no casual partnership. When the U.S. imposed tariffs up to 50% on metals, it felt like a betrayal. For Canadian producers, the U.S. wasn't just a market, it was the market. Communities in Quebec and beyond depended on this industry for generations. Suddenly, their livelihoods were at risk, as tariffs threatened to price them out of their only major export destination. Imagine if 90% of your income depended on one client, and that client suddenly charged you a massive fee just to do business. Orders stalled, contracts were in jeopardy, and thousands of jobs hung in the balance. The Canadian government, led by Justin Trudeau, faced immense pressure to act. The shock was palpable. Years of close cooperation were upended overnight. Anti-US sentiment rose, and Canadian travel to the US dropped by 20%. The tariffs weren't just economic, they struck at the heart of North American partnership. Canada was forced to question its deep reliance on its southern neighbor. The crisis demanded a new strategy. The old playbook was gone. Canada had to find a way out of the economic headlock. Canada didn't just take the hit, it fought back with a two-pronged strategy. First, retaliation. Canada imposed nearly $20 billion in tariffs on U.S. goods, targeting products from politically sensitive districts. The message was clear: hurt us, and we'll hurt you back. But retaliation was just the start. The real game-changer was diversification. The tariffs exposed Canada's dangerous dependence on the U.S. market. The government realized it was time to find new buyers for its $18 billion aluminum industry. Enter Europe. Canada had just signed the Comprehensive Economic and Trade Agreement, CETA, with the EU, opening a massive new market. While the US built tariff walls, Canada had a clear path to Europe. The strategy shifted from breaking down American barriers to simply walking around them. This pivot wasn't just about survival, it was about future-proofing the Canadian economy. The crisis became an opportunity to build new partnerships. Canada's response was bold, strategic, and forward-looking. The old reliance on the US was over. A new chapter in Canadian trade was beginning. The world was watching. The aluminum migration was on. Canadian producers redirected $18 billion in exports from the US to Europe, a seismic shift. This wasn't a minor adjustment. It meant finding new buyers, building new supply chains, and navigating a different market. Decades of shipping south were replaced by a new route east. Sales teams hustled, logistics experts mapped new shipping lanes, and the industry adapted fast. By 2024, Canadian aluminum exports to Europe had skyrocketed. European industries welcomed the reliable supply, especially amid global trade turmoil. The U.S. tariffs, meant to protect American industry, ended up strengthening Canada-Europe ties. It was a classic case of unintended consequences. The aluminum pivot became a symbol of a changing global economy. Old alliances were tested, and new ones were forged. How did Canada pull off this $18 billion pivot? One word: CETA. The Comprehensive Economic and Trade Agreement with the EU eliminated tariffs on 98% of goods, including aluminum. While US shipments were stuck in tariff gridlock, Canadian aluminum cruised into Europe. CETA gave Canadian producers access to 450 million consumers and a level playing field. The agreement streamlined regulations and reduced red tape, making business easier and more predictable. CETA's stability stood in stark contrast to US trade chaos. Without it, Canada's pivot would have been far slower and riskier. CETA turned a looming disaster into a golden opportunity. It proved the power of forward-thinking trade policy. When the tariff storm hit, Canada had its umbrella ready. This trade shift had real consequences for people and businesses. In Canada, the European pivot saved thousands of aluminum jobs and kept communities afloat. For the US, the story was different. With Canada sending aluminum elsewhere, American manufacturers faced shortages and higher prices. Costs soared for everything from cars to beer cans, and companies like Campbell's Soup warned of weak sales. These costs were passed on to consumers. Americans paid more for everyday goods. The manufacturing sector, which tariffs were supposed to help, actually contracted for 6 straight months. Instead of boosting industry, tariffs strangled it with higher costs and supply chain chaos. The US trade deficit widened and recession fears grew. Even small online purchases from abroad were hit with new tariffs, causing headaches for businesses and shoppers alike. The trade war trickled down to the package on your doorstep. The ripple effects were felt throughout the entire US economy. What started as a metals dispute became a nationwide economic headache. The pain was widespread, and the policy backfired. The lesson: protectionism comes with a price. The US-Canada dispute was just one piece of a global trade war. The Trump administration's America First approach triggered a domino effect of tariffs and retaliation worldwide. The EU hit back with tariffs on $28 billion of American goods. China imposed steep duties on US imports, and India sought new markets after facing doubled tariffs. Countries everywhere scrambled to find new partners or put up their own barriers. New alliances formed and old ones fractured. China, Russia, and India began building alternatives to the US-led order, including a new Silk Road. Even neutral countries like Switzerland were caught in the crossfire. Japan signed a new trade pact with the US, but tariffs remained high. The global trading system was being dismantled, replaced by a more fragmented, expensive landscape. The world of open trade was closing fast. What does this mean for the future? The Canada-US trade relationship has been fundamentally altered. Canada's $18 billion pivot to Europe is a strategic declaration of independence. Diversification is now central to Canada's economic strategy. Europe isn't the only market, but it's now indispensable. The US will remain important, but the dynamic has changed forever. Canada has more leverage and is no longer a captive market. The seamless North American economic space is gone, replaced by a more complex landscape. The Supreme Court's ruling and ongoing negotiations will shape what comes next, but the old era of unquestioning reliance is over. In summary, Canada's aluminum industry has been transformed. US tariffs threaten to cripple a vital export, exposing the risks of over-reliance on one partner. Canada responded with retaliation and, more importantly, a historic pivot to Europe. CETA enabled $18 billion in aluminum exports to cross the Atlantic, saving jobs and companies. The US faced higher prices and supply chain chaos, a lesson in the dangers of protectionism. Globally, trade tensions pushed countries to form new alliances and redraw economic maps. The old US-centric order has been challenged. Canada now has a more resilient, diversified strategy. The future will depend on court rulings and politics, but the map of global trade has changed. Canada has charted a bold new course.